Actually, we're going to start all over. So welcome everybody to today's open forum. The recording wasn't working. Now it is. Welcome everybody to today's open forum. Today we are going to discuss the financing, contingency of a contract, and escrow disputes. We've been having some issues with those items, and I want to address those. I'm going to use an as is here, but the financing for a standard or an as is contract is the same. Again, I recommend you guys use the as is for lots of reasons that we won't get into right now, but I've done separate trainings on that, the comparison of the two. But the as is just better for the buyer and the seller, in my opinion. And I can give you a million reasons why. But let's go into this. The financing contingency. We're going to go to those of you who let me get a little bit bigger here, so you can look on your screen and see it. All right, financing contingency. This is a cash contract, or the second part. This is what I want to talk about. B on line 89. This contract is contingent upon within typically 30 days after the effective date, called the loan approval period, the buyer obtaining approval of a whatever kind of loan it is. Should match whatever their pre-approval says, for purchase of the property for a fixed, adjustable, fixed or adjustable, whatever it is. Usually it's going to be fixed. Interest rate not to exceed, if left blank, then the prevailing rate based upon the buyer's creditworthiness. You should put whatever's in the pre-approval here, or if you're on the buyer side, maybe even something a little bit better, for a term of how many ever years. Typically it is going to be 30 years. And buyer's mortgage broker or lender having received an appraisal or alternative valuation of the property satisfactory to the lender, if either is required by lender, which is sufficient to meet the terms required for lender to provide financing to buyer and proceed with closing. So yeah, anything like a low appraisal changes the buyer's financing anyway. It's going to change the amount of the financing. It's going to change the terms. Anything like that can get the buyer out through the financing contingency. So if the appraisal comes back $1,000 low, they can get out. Or they can, I mean, you don't want to get out typically. You want to go ahead and go with the deal. So you negotiate with the seller, or you just bring an extra $1,000 to closing. But typically it's not 1,000, because it's amazing how appraisers will stretch it if it's close to meet it, or if it's $5,000 short, they're going to be short. So depending on the price of the house. So do you guys have any questions on that? So what I like to do, if you're on this buyer side, I don't mind putting in a rate of maybe a little bit lower, something they think they hope they can get, something like that. Maybe ask the lender what's the best we could probably hope for, and they'll tell you. That gives you a little more flexibility. If you're on the list side, I'd like to see that at least either be left blank to meet the market rate, or meet whatever's on the pre-approval. Okay, just to protect your seller. 30 days. I'm going back up to line 89 now. The 30 days. That's typical and standard. If you're going to have a regular, most lenders are going to tell you they need 30 days, or they'll tell you 21 days or whatever, but I would keep it at 30. Sometimes though, you have somebody that's like, oh, I'll close in 30 days. Well, then make this 20, or make this something else. Right. So, that's something, every blank on this contract is negotiable. Okay. So that's that. Any questions on any of that paragraph? What if we want to go? We recently just had one. Somebody called me and was worried. They went from a conventional loan to a cash deal. They ended up getting the cash. They went to a cash deal. What do you need for that? Anybody know? Let's hear it.
Seasoning.
Pardon me?
Seasoning from the bank.
You don't need anything from the bank to switch from a financing contingency to, you're waiving your financing contingency, really.
Oh, completely cash. Sorry.
Yeah, you're going to cash deal. So what do you need?
Proof of funds.
You can ask for proof of funds for sure. Yeah, but you don't. But you don't really. So from the seller side, you don't really need anything. From the buyer side, you don't really need to do anything. You are waiving your financing contingency, but you don't have to do that in writing. I would keep my financing contingency just in case something happened with the cash, or something comes up or whatever. I wouldn't waive my financing contingency. I would just go on. So you have the cash now. You definitely have a deal. The financing's not going to fall apart at the last minute. It's a great thing. What you can use it for is to, in some kind of, and this is just This is just business. You can use it for some kind, asking for something from the seller. And that's what our agent ended up doing, is ask for a couple of repairs and offered to, in exchange for those repairs, waive their financing contingency. And they got them. Yes, Daryl.
What do you do if you have hard money? Is it I put cash and then I put the pre-approval for the hard money? Am I doing it wrong?
Well, if you
I've
put
always done
cash,
it all.
well, if you put cash and the hard money falls apart, then they're out of luck. So I would not do that. I would do as financing, and I would do contingent on that. But if you want to get the deal accepted, I mean, depending on what it is, if you really know you've got the hard money, you're fine. But I would still do a financing contingency on that too. I mean, unless you're really just trying to get the deal. I mean, if you're getting a great, obviously, usually when you do hard money, you're getting a great deal on something, and they're going to accept it, or they want cash. Yeah, we'll take this much if you give us cash. So you do a cash thing, and it's not their business where the money comes from. So that could, if you don't have a financing contingency, I don't care if I'm borrowing it from Aunt Susie or Uncle Larry or a hard money lender or whoever. It's none of their business where I get the cash from, unless they want to see a proof of funds. In that case, you got to give them a proof of funds, even if it's Uncle Larry, and you tell them Uncle Larry's going to do this. Also, what you can do, and I recommend, I'm going to go up a little bit higher on the screen here to number 7, assignability. I would do may assign but not be released from liability under this contract. That way you can put Uncle Larry on the contract and take them off at the end. Okay? Because if you click this may assign, the seller does not have to, you do not have to get it approved by the seller. I like may assign but not be released from liability in this contract for every deal, because how many times do you see they've got to add their mom or take their sister off, or add their uncle, or take their their dad off, or whatever they have to do to make the financing work. And that gives, I don't have to get that approved by the seller every time. It just makes it easier if I do the may assign but not be released from liability under this contract. I like that on the buyer side. I don't mind it on the seller side. They're not getting out of liability on the contract, so I don't mind it on the seller side either. So I think that's a common sense one. But they make the default that they cannot assign the contract. But almost everybody clicks one of those two, and usually people click may not assign this contract because they think it looks better. I think it makes the whole thing a little clunkier. Now we got to go get an extra addendum, and the seller kind of holds some cards now if we're arguing about something. If we're going back and forth on something, they kind of hold the cards. Well, we're not going to let you sign this. What if they're trying to get out of the deal, and you say, I need my uncle on here so I can get approved, and they're trying to get back out of the deal, they'll just not assign it. No, they don't have to assign the contract. You clicked may not assign the contract. So that was part of the terms that we agreed. And when we took this contract, your offer, we said we only liked it because you said you wouldn't assign it, right? That's what they would say. Tammy.
I've had a couple of, not many, but where I've been the listing agent, and then I've gotten the contract where they check cash. So I ask them for the proof of funds, and they send me this like letter from a bank, and I'm like, this is not cash. So I was always confused because it's really not cash. But I'm like, well, they're going to lose their escrow deposit then, I guess, if they don't perform.
Yeah, that's fine. No, you're going to get letters from banks. Yeah, that's fine.
But it's not.
The bank's saying they've got this much laying around they can get to. That's
well,
fine.
I mean, yeah, it's like the hard money stuff to me is really not cash.
Yeah, but if they're saying no contingency. They're just waiving the contingency. You don't care if they've got cash in a suitcase, or they've got cash in the bank, or if it's in a money market, or if it's in the stock market and I got to liquidate it, whatever. They better show up with cash on that thing. So as soon as their inspection period's done, they're locked in.
Okay.
That's all they're doing. They're waiving their financing contingency. That's all they're doing. They're trying to make the deal look more attractive. That's what Daryl was talking about with the hard money, but putting cash. They're just trying to make it look more attractive than if I go in here and put other on line 90, I go in and I put instead of conventional FHAV, I put other hard money, fixed, not to exceed 12% and all that stuff. It's going to raise some eyebrows.
Right.
So, and for a term of 0.5 years, what are we putting there? It's a 6-month loan or whatever it is, so that's what he's doing. So if you're just waiving, if they hit cash, I mean, you can ask to see a proof of funds. Anybody can get a proof of funds if they've got access to that money, and a bank will write you a letter, that you can use forever. And so, it depends on what I don't, proof of funds, I don't really scour very well. A lot of times they black their name out, they black the account number out. They could have been from any time or any date or anybody. And a lot of times they are getting the money from, Aunt Susie or Uncle Larry. And so it's somebody else's account or something like that. And they just say, oh, they're giving me the money. I mean, what do you care? They're not doing a financing contingency. I mean, I'd like to see proof that they have the money, but it's an inexact science. And some people don't ask for it. Oh, cash deal, whatever. So that's that. Buyer shall make application for financing within 5 days. So let's talk about this. I have seen you guys, and I've seen other people, other agents from other brokerages dealing with your clients who say, oh, they get to the end of the loan approval period. It's the day before closing, and they say, oh, well, they can't get out or the day before the financing period, they can't get out for financing because they didn't make their, we should get the deposit. They didn't make their application within 5 days. All right. That is something to argue about on day 6 or day 7. If you keep going forward with the deal, that is irrelevant. Okay. That is like saying the bottom of page 1, when you time for acceptance was the 24th and they didn't sign till the 26th. Well, you should have said that on the 26th. Now it's the 15th of the next month, and it's too late to argue about something that happened in the past. If we have gone forward, and that's for anything in this contract that has a time period, if we had gone forward like everything was fine, then everything was fine. You can't go back and complain about something else. I know we do that in our friendships and relationships and everything else, but you can't do that in contracts. If you went forward like everything was fine, you can't go back and be mad later. So that's your time to argue about this 5-day thing. I see this all the time. Well, their lender said they didn't make, you should have said that. You should have been following up. If you are not diligent in this business, you are not going to win these breach arguments. Okay. You have to be diligent in this business. This is your job. You guys get paid. If this thing goes through, you're going to get paid somewhere between $5,000 and $25,000 typically. So pay attention. This is your job. Pay attention to the dates. If you're going to argue, do it then. If you're really concerned about these people making their financing application, then you should be on it. But you're only going to do that if you're really worried about the people paying attention, right? So you're not out there looking to kick a deal on day 6 because they didn't do their application. So don't come back. You guys do this. Other people do this. Don't come back on day 28 and say, oh, they didn't make their application until day 7. So they weren't serious and they breached the contract. No, the time for that is on day 7. Okay, day 6, day 7, day 8, something reasonable. If you talk to the lender on day 9 and the lender says, well, they just made their application yesterday, and you're not happy with it, you can talk to your seller and kick the deal. Okay, that is a reason to get out of the deal. On day 9, if they made their application on day 8 and you're thinking they're dragging their feet, then you can do that. Okay, or on day 9 or day 8, you talk to the lender and they haven't made their application yet. That's a good time to kick the deal if you want to. Okay. Any questions on that? All right. So something that changed, when was this? A couple of years ago, we had trainings on it. A lot of them when it first happened was the 30-day loan approval from, you guys remember loan commitment, and now it's loan approval. Loan approval is a more vague goal to have, a more vague goalpost to reach. So they changed this from a loan commitment, which was actually something you would get from a lender, a hard piece of paper, or hard email that you would get from a lender saying, we commit to this loan. And it typically had conditions still, because you're not ready to go, but the conditions were minimal. That's how we consider loan approval now. So, and they will tell you now that you have loan approval with these conditions, right? So this is another place where you have to be very diligent as both the buyer's agent and the listing agent in this loan approval period. So before the end of the loan approval, you have 3 things that you can do as the buyer's agent, as the buyer, through your buyer's agent. You can say, we have loan approval and we're going forward. You tell the listing agent, we have loan approval and we're going forward. You need to do this in writing. You guys do this not you guys, all agents, all realtors do this very, very infrequently, which is actually go through with this and let the person know in writing, in an email. Please do it in an email and say, we have loan approval and we're going forward. That's typical, right? The other thing to do is, the other 2 choices are if you don't have loan approval. If you have loan approval, you have to go forward, right? If you don't have loan approval, you have two options. You can say, don't have loan approval and we don't feel good about this and we're canceling. Sorry, things didn't work out, right? Maybe the appraisal's low. Maybe whatever happens, we don't have loan approval as we were contracted to have it, and we're out. Here's your release and cancellation with the escrow coming back to my client, right? The buyer. That's perfectly fine. The other one, though, is that we don't have loan approval, but we feel great about it and we're still going for it. Okay? You guys have done that too. That is something to do. A listing agent might be prompting you, especially if they really want this deal to go through, and saying, hey guys, we're on day 28. You know anything about this loan approval? You guys have loan approval yet? You know, how's the loan looking? A lot of listing agents will do that. Diligent listing agents will do that, as they should. Otherwise, so if you don't say any of those three things, even if you have loan approval and you don't say any of those three things, on day 30, and let's assume it's the 30-day approval period, which it normally is, on day 31, 32, or 33, and this is what I talked about being diligent on talking about the application period. On day 31, 32, or 33, the seller can kick you out of the deal and give you your money back. They do have to give you your money back, but they can kick you out of the deal if they didn't hear from you. If they did not hear that you have loan approval or don't have loan approval, any of those three things I just said, even if you have loan approval, they can kick you out of the deal, give you your money back. Okay. It's not as big of a concern right now because sellers are happy to have buyers right now. But you guys remember a couple of years ago, this was a thing that they would get a better, as soon as they signed one with you, they get one for 20 grand more just a few years ago. And they'd be happy to kick you out. But just something to keep in mind, whether you're the listing agent or the buyer's agent, they can kick you out of the deal on day 31, 32, or 33 if you did not give them notice. A lot of you guys do not give notice within the 30 days like you're supposed to do. And you can nod your heads because we know that that's the case, but you better start doing it. You should have always done it. That is just being a diligent agent, and your buyer will not be happy with you if they get kicked out of a deal because you didn't keep the listing agent updated. All right. On day 34, you're both stuck going forward. If you didn't say anything and the listing agent didn't say anything and the buyer's agent didn't say anything, you're stuck going forward. Better see you at the closing table, or the seller is going to get or have a claim to the escrow. Okay. So if nobody hears from you through day 34, which is, I bet you it's 95% of the time, nobody communicated through between day 29 and 34. And we'll see you at the closing table if we don't hear from you, right? So that's what's going on. That's how that works. So buyers, okay. So one of the other things that changed with that loan commitment thing was that per the contract, the lender must speak with the listing agent. Lender not only can communicate now with the listing agent, they have to. In the good old days, before 5 years ago or so, whenever this changed, they would not talk to the listing agent about any of the buyer's business because it wasn't their business. Now they have to talk to the listing agent. It says seller or listing agent, seller or broker. Buyer shall, upon written request, keep seller broker fully informed of the status of the buyer's mortgage loan application, loan processing, appraisal, and loan approval, including any property-related conditions of loan approval. Buyer authorizes buyer's mortgage broker, lender, and closing agent to discuss such status and progress and release preliminary and finally executed closing disclosures and settlement statements as appropriate and allowed to seller and broker. So your lender now cannot tell the listing agent or the seller it's none of their business. They have to comply with all of this. It's in the contract. Okay. So as a listing agent, you can call, you're worried about the lender, call the lender. And what's going to happen a lot of times, you're going to call the one on the pre-approval and they're going to say, I haven't heard from this person since I gave them the pre-approval because they picked another lender or whatever. But the buyer's agent and the buyer have to tell you who the lender is. Okay. And then you contact them. If within the loan approval period, buyer obtains loan approval, buyer shall notify seller of same in writing prior to expiration of the loan approval period, or if buyer is unable to attain loan approval within loan approval period, but buyer is satisfied with the buyer's ability to obtain loan approval and proceed to closing, buyer shall deliver written notice to seller confirming the same prior to the expiration of loan approval period. When it says buyer, that's typically going to be the buyer's agent doing that, right? So pay attention, get the buyer. You have to talk to the buyer, especially if you don't have loan approval, and say, hey, we don't have loan approval. How do you guys feel about going forward? And they're going to be in contact. The the loan officer is going to be telling them, feel good about this or don't feel good about this. These are your conditions, etc. If buyer is unable to obtain loan approval within the loan approval period or cannot timely meet the terms of loan approval, all after the exercise of good faith and diligent effort, that's where a lot of the argument comes in. Did they really try? Did they get their documents? Because the loan officer will tattle on your buyer and tell them, look, I've been asking them for documents. I've been asking them for tax returns. I've been asking for this, and they won't, it takes them 10 days to get me stuff. That's why I don't have loan approval. That's why we're not, probably going to meet the closing date. That's why they're going to be asking you for an extension. They will tattle on them. So you've got to be on top of this too. After all exercise of good faith and diligent effort, buyer may terminate this contract by delivering written notice of termination to seller prior to expiration of loan approval period. Whereupon, provided buyer is not in default under the terms of this contract, buyer shall be refunded the deposit, thereby releasing buyer and seller from all further obligations under this contract. That was the option I gave you where they didn't get loan approval. They don't feel good about it. They're going to just get their deposit back. If buyer fails to timely deliver any written notice provided for in paragraph 8 to seller prior to expiration of loan approval period, then buyer shall proceed forward with his contract as though paragraph 8 above had been checked as of the effective date. Provided, however, seller may elect to terminate this contract by delivering written notice of termination to buyer within 3 days after expiration of loan approval period. That's day 31, 32, and 33 that I talked about. Provided buyer is not in default under the terms of this contract, buyer shall be refunded the deposit, thereby releasing buyer and seller from all further obligations under this contract. Okay? Any questions on this stuff, guys? This is the time to ask. If you have any questions? All right. Don't see any hands. I see a hand. Yes, Daryl.
One thing I like doing is asking for important dates. I have the other agent send me what they agree with the important dates on the loan commitment, on any kind of important dates, and that way we're both on the same page. That lets them know that I'm looking at the dates, so it keeps everybody abreast of what's going on. It's a practice that I got years ago, and I keep on doing it, and it works out great.
Right, and I think that's brilliant. More communication is better than less communication, and getting on the same page now so they don't argue. I mean, how many times does that happen? Oh, we know we have till tomorrow. No, the effective date was this day. Oh, but you're counting that holiday, and you're, whatever it is. A lot of people have no idea about the dates, and we can go over that another time. What counts calendar days? What counts, like escrow deposits? Obviously, if you have 3 days to make escrow and you sign it the day before Columbus Day or something, the weekend before, there's a 3-day weekend, you're not out of contract. You have 3 business days to make escrow, 3 bank days to make escrow payment or deposit. So, but everything else goes on calendar days. But what if the calendar days ends on a Saturday or Sunday? Does it roll over to Monday? Yes. Okay. So different things have different dates. And so it's great to get that out there and get that out in the open. Everybody's agreed to it. Also can protect your buyer, even if you're wrong about the dates. It can protect your buyer and say, oh, look, both sides agreed to this, right? So you go to, if that ever gets in, we're going to talk about when this thing goes bad later on. That gets you, if you get into an interpleader situation, you get in court or whatever, and everybody agreed to this, their representative agreed to it, and then you're covered, even if it's wrong, right? Because they agreed to that outside of the contract. And we're talking about things that both sides have agreed to. So even if it, in writing, of course, not just on the phone, but you're sending emails, and if they say, yeah, those dates look great, then you're good. Malvis, I love that, Daryl. Extra communication is great. Malvis.
I don't know how Daryl does it, but the way I keep track of that is when I send the executed contract to the title company, in that email where the listing agent is copied, the buyer's agent, the title company's company is copied, I put the dates in there.
Yeah, I think it's important to get a response too, though. So you want them to respond that they agree with those dates. And I don't think they will. They'll respond that they saw that email when you send that. But I want them to respond to your email and say, yep, it looks good. I even, do you agree with these dates?
Okay.
These are the dates. These are the dates that we have everything, not like, this is my guess, Adam. Just say, these are the dates. And if you're wrong, you're wrong. If they correct you, then you work it out. It doesn't matter when the dates are, just so that you both agree to them. You know, if it's a day sooner than I thought that my buyer has to be done with their inspection period, then that's fine. I don't even, really care if I'm right or wrong. Just say, okay, well, if it's the 9th instead of the 10th, that's fine. That's what we'll do. Right. As long as we agree. And I mean, if they're wrong by, 5 days or something that's important, then do it. I'd rather you be right. Don't take me wrong with that, but I'd rather you be right. But as long as you both agree to it, then that's what's going to hold up. And if you are insistent on it because you know you're right, then they'll have to agree with that. And they're not going to just, okay, if you say it's the 10th, it's the 10th. They're not going to fight you on it. Just have it done by then. Any other questions on that? So yes, Malvis, please, I love that you do that, but get them to maybe send them a separate one. Say, hey, these are dates you have to.
Okay.
And just make sure I want us all to be in agreement, right? That's what you tell them. And that way you're all in agreement and there's no arguing about it later.
Okay.
Any other questions on that? So you do have, if the appraisal is low, it changes the terms. Anything that changes the terms of the loan is a reason to get out of the financing contingency. Is to use the financing contingency to get out of the contract if they need to. For example, they have to bring an extra $5,000 to closing, and the seller won't agree to drop the price $5,000 or help out in that. That's perfectly fine. That's a good reason to get out of the deal. And a lot of people can't come up with another 5,000, or I'm saying 5, it might be 20, it might be 50. We've seen all kinds of things. So that's that. It affects the part up here. So when it affects the part up here, and I'm going to the top page, it affects the percentage that they actually have to bring to closing. Okay, so it changes the financing terms of the deal. So if I have 80% right here that I'm financing, and then it appraises $20,000 low, and that turns into I've got to bring I'm only actually financing 78% now. Then you've changed my financing. I've got to bring more cash to closing, and you have changed. My financing is not the same as it was. My pre-approval is not the same as it was. The amount that I applied for is not the same as it was, etc. So you changed it. Are you guys ready to move on to escrow? Any other questions on this? Okay, we're going to move on. All right. Escrow interpleader. What is the role of the escrow agent? Okay, what is an interpleader? So you guys know why we use escrow agents, right? We have a third party who holds the deed that is signed by the seller, and they hold the cash that is brought forward by the buyer and the lender, buyer and or lender, and they release both at the same time, right? That's when they send you that email. Congratulations, we've dispersed. That means both they're recording that deed and they handed the seller the money. They wired the money to the seller. They didn't hand it to them, but they wired the seller's money. They paid you. They paid all the everybody who had a lien or everybody who had any claim on the settlement statement. They paid everybody everything, right? That's dispersed. They got everything they needed, and then they dispersed it all. It is the same as when you see two guys, rolling dice on the side of the road, and one guy is the middle guy who holds the money, right? When they're betting, they hold the money and then they give it to the winner, somebody, a third party that both sides trust. That is the role of an escrow agent. The interpleader is when we have an argument about that money and we cannot agree. And it's very important that you guys understand what this is. And I am going to blow it up again for you. All right. An interpleader is a lawsuit that is filed by an escrow agent where the parties cannot agree to the disposition of funds. As a matter of practice, most escrow agents will not initiate an interpleader action when they discover the parties have a dispute. They will wait a reasonable period of time for the parties to try to work out the issue between themselves. What amount of time is reasonable differs from agent to agent and situation to situation, but typically at least 60 days. That has not been what I've seen, but it's usually been less than that. But let's go further into it. To file an interpleader action, the escrow agent must hire an attorney. That attorney must name as parties anyone who has a claim to the escrowed funds. This typically means the buyer and the seller. While listing brokerages may have a contractual right to a portion of any deposit that the seller recovers from a breaching buyer, they are not typically made a party to an interpleader suit because they are not a party to the escrow agreement. The right to payment from the seller springs from a separate listing agreement. You guys are all familiar with that. After all the parties are brought into the suit, the escrow agent asks the court for permission to deposit the escrow funds into the court's bank account so that parties are able to fight over entitlement. Sounds fine, right? Until you read further. It doesn't directly impact, does an interpleader action impact my transaction? Doesn't directly impact a transaction. When an escrow agent has decided to interplead funds, the deal has typically been dead for months. From a practical standpoint, though, it is useful to understand the interpleader process and the associated costs. The escrow agent will incur attorney fees and court costs for prosecuting an action and is usually allowed to recover those amounts from the escrowed fund before depositing the rest with the court. The amount is usually in the $3,000 to $5,000 range, although much higher amounts are possible if any party fights the interpleader action. Regardless, buyers and sellers should be aware if they cannot ultimately agree on how escrowed funds can be divided, the total bucket of cash for them to fight over will be reduced as the matter proceeds to an interpleader stage. This is valuable insight for an agent to provide to a client, especially when the amount of deposits is smaller. This is what I hear you guys arguing about. I have seen you guys argue over $1,000 and $2,000 and tell the title company you're going to do an interpleader. That is ridiculous. You're going to have to work it out. You need to make your clients aware of that when they start getting excited about, your sellers start getting excited about keeping the buyer's deposit. That they're going to typically, most of the times we see these split in some fashion if the buyer fights it. If the buyer I've seen buyers just say, okay, I'll walk away from my $5,000 or $10,000 or whatever, or $1,000. Usually though, the smaller the deposit, I think you guys will probably agree with this, the more the buyer is going to want to fight over it because that's probably a great deal of money to them. It's not a very big house. It's not maybe a first time home buyer. If they can only put $2,000 down, it's because that's a great deal of money to them. And they're going to want to fight over it or try to get some of it back, even if it's their fault, because they don't understand what their fault is versus other people. They don't understand what they're breaching if they went past their financing contingency, etc. So I've seen you guys do this. If it's a $20,000 deposit, a $40,000 deposit, then maybe we're onto something here. Usually they'll split it one way or another, but I would like to see you guys work a little more towards and I've seen you guys do it because we don't have many interpleader actions. So typically just be prepared and prepare your client that if they have to do an interpleader, it's going to take $3,000 to $5,000 out of it. And this was a couple of years ago. This article was written in 2023, I think. So it's going to take $3,000 to $5,000 out of it. And typically you guys are fighting over $5,000 to $10,000. So they're better off coming to some kind of agreement. And I don't think they understand that. They're like, oh, we'll just go to small claims and fight this thing out. It's not the way it works. I mean, it is the way it works, but that's after $3,000 to $5,000 gets taken out. You've got to take time out of their schedule. Some of them hire attorneys to do this, and there's just no money to fight over when it's over. Do you guys have any questions on this? Do you guys have any stories of interpleaders you've been through? Malvis, I'll answer your question about the loan approval with conditions. That's considered loan approval. That's why they send you that. There's always going to be conditions. Condition that you keep your job, condition nothing that happens to the house, condition. And we've all seen some of those conditions get nixed at the last minute, meaning they can't close. And then you're sitting there fighting over escrow or, trying to get your escrow back. And you can't wait till all conditions are met. It's going to be past the 30 days. That's going to be right before closing. Underwriting always has something at the end. Any questions on this? You guys understood interpleader already? Or you just haven't had to go through it? Wow, nobody, huh? All right. You guys are doing great. You guys have any questions about anything else? Let's move on then. I thought you guys would be interested in that because I see you guys having these issues. Yeah, Chad.
Hey, Ryan. I'm dealing with a situation with I'm listing agent. Buyers are fighting over, the 10 grand that, they missed out on the financing contingency. They're basically wanting to offer the seller 2,000 of the 10, which the seller just can't do because they basically, financially wrecked him, keeping this thing off the market for 2 months. Um, what's the best way to explain to these people that no matter what they do, if they keep trying to hold on to as much as they can on it, they're just going to end up, one, losing money, even if they did get it back, but two, they're not going to get it back because they signed a contract. And if they didn't want to lose 10 grand, they shouldn't have put 10 grand down as the escrow.
And you have the listing agent, are you the listing agent?
I'm listing on it.
Okay, and the buyer is in default.
Yes.
Okay, that's not really negotiable. I mean, it's not really iffy. They're just definitely in default. They just didn't show up for closing.
Well, no, they didn't get their loan got denied 45 days
Okay.
into it. They only had 30 days per the financing contingency on there.
Okay. Your seller is going to do well to get half that money, and I think that's what you kind of have to prepare people for. Even if you're right, it doesn't matter. You're going to have to settle for something. But to offer $2,000 is a little insulting when they're completely in the wrong. So if I were the seller, I would just stick to my guns. And you know what? For $10,000, let him do an interpleader. I mean, he's going to get.
Well, yeah, he just doesn't have the time. Is the problem?
He doesn't have the time. He needs the. Or you go back on the market. So as soon as you got that loan denial, you go back on the market.
Okay.
You don't have to wait for you don't have to wait. They can't hold you hostage. I'm glad this came up.
Well, yeah, and
they
we did try and give a
Guys, if
different.
you're a listing agent and a buyer cancels late, anytime a buyer cancels and they want to argue over escrow, you can go back on the market. Okay. If they sent you a release and cancellation, you can go back on the market. Or if they're past the closing date, you can go back on the market. You do not have to. Nobody can hold your seller hostage. You can go. If that was the case, buyers would always win these things because they would just keep seller's property off the market.
Yeah, they're refusing to sign the release.
Well, that's fine. Just then it's a dispute, but you go back on the market.
Yeah.
Is that what the concern was? I mean, I'm sure he could use the money too, but if that's what the concern was.
Well, yeah, no, concern at this point is just, it's an old guy who has no income, and this was supposed to pay off his bills so we can afford to live. Right. And just every day that passes that they're fighting this thing, it's just digging him deeper into a hole to the point where he's probably eventually going to have to just declare bankruptcy.
Okay. Yeah, you need to get back on the market and sell it somewhere.
Yeah. Thank you.
Yeah. Sorry, Chad, I know that's not much of a thing, but he should hold on for more than $2,000 for sure. I mean, it does matter if you're right or wrong.
Yeah, well, we offered him 2,500.
Yeah, I think that's more than fair.
Yeah, I don't know. I kind of feel for their agent to a point, but at the same time, he should have also been, when I told him, they do realize that they're going to lose the 10 grand. He was like, what? And yeah, so it's going to be a mess one way or the other on this. No one's going to walk away happy.
No, that's the way it goes. And the buyers are just people who like their 10 grand. So of course they're going to try to get as much of it back as they can, but they are dead. Sounds like they're dead wrong in this situation. And it doesn't matter. I didn't mean, just because I say people should settle doesn't mean it doesn't matter who's right or wrong. The settling should be in the favor of the person that holds the cards, is someone who would win the interpleader. That's who holds the cards.
Yeah.
Right. So that's what they need to do. But they can't get, these interpleader things. They're going to take money right off the top, and they're going to take, like this thing says, $3,000 to $5,000, depending on the attorney. And you might want to ask the title company that too. That might be something about, what do you guys charge for filing this? And and they might not know the title, the people on the front line, the title closers and stuff probably don't know, but have them ask their manager or their owner. All right.
Thank you.
Because they're going to say, oh, I don't think we charge anything, but they do. Because they don't see it. Daryl.
Hey, Chad, I'd have your seller speak to your real estate attorney. Hopefully your real estate attorney is at your title company. Mine is. I had exactly the same thing happen to me 10 years ago. It was for a penthouse in downtown Orlando, and it was a $100,000 deposit. I contacted my attorney. We went to get the 100,000. We settled for half of it. I was part of the lawsuit, so I also got part of it. So you got to stick to your guns and make sure that you're a good listing agent for your seller. It happens. But I even told the buyer's agent, I said, you do know that your escrow's in jeopardy, $100,000. And she's like, no. I said, yes. And that was like a day or two before it was actually due. I'm like, dude, you need to send me something. You know, I'm trying to save your butt. And she didn't listen to me, and it was her fault. I felt sorry for her and her buyers, but that's the way it is.
Yeah, I had to actually have the head of the because I'm a settlement agent for the title company, but I just to make sure everything was fair and square, I had the head of the title company actually call and try to talk with the agent to make sure he knew what was going on. On there, because I want to make sure everything is fair and square. This thing, it's literally the only people that are being weird about this are the buyers. And if you don't want to lose 10 grand, don't put 10 grand. Put 2,500 on there. Only put it up where you can afford to lose.
Yes, correct. All right. Any other questions? All right, guys. Well, you guys have been very quick. Yes, Malvis.
So actually I do. So when you, going back to this scenario, when you put the home back on the market active, wouldn't they have to be canceled with this prior buyer before? And if there's a dispute about deposit, when you send that release and cancellation, there has to be an agreement to disperse those funds. So how did you put a house back on the market that has not been canceled for writing?
They canceled when they got denied for the loan. When they notified you they got denied for the loan, they're canceled. They're not signing the cancellation because they do not agree with how the escrow is being dispersed. But they've told you in writing that they're canceling. So, or in this case, I imagine the closing date has passed. Once that closing date has passed and the buyer did not show up with the funds, back on the market. I don't care if Malvis, they cannot hold the seller hostage. They can't hold the property hostage. They go back on the market just because they're arguing over the deposit. Otherwise, buyers would always win those disputes because sellers got to sell their property eventually. If I'm a buyer, I just drag my feet. All right, I'll just tie you up forever. Never sign this thing. See you in court in 4 months. So sellers would always just capitulate and say you can have have your deposit. So that's why. So you go back on the market. Look, it's a contract. These are grown-ups that signed a contract. And they put up a deposit. That deposit is at risk, just like a deposit you make for a cruise or a trip or anything that you make a deposit for. It's at risk if you don't perform. You're either going to do it or you're not.
So Ryan, that release and cancellation form is only for the purpose to disperse the funds, but you don't have to have it signed in order to cancel a contract?
No, I want you to sign it to cancel a contract. It's not just for that, but you always send it. No, you guys have done this before during the inspection period, and you send a release and cancellation. The other side doesn't sign it. They just put it back on the market. You send it to me. Sometimes we'll sign it. Sometimes we won't. If their broker doesn't require it, then they don't. Some of you guys don't even put your deal in, and you have deals go under contract and cancel, and you never even put it in paperless pipeline. Yes, I know it happens. And you need to do it because you're supposed to put your paperwork in within 3 days, but you don't. But it does happen, and you guys just send a release and cancellation, and the deal's dead. So the release and cancellation, yes, you're supposed to do that to kill a deal. You are supposed to. But if you're not performing, the deal's dead anyway. So if you don't make your escrow, the deal's dead anyway. If you don't, and you guys have had that too. I know you guys have had that, and the deal dies within 3 days because the buyer didn't make their escrow deposit. And maybe they changed their mind, maybe they did whatever. Maybe you never even hear from your buyer again. I've had that happen. You guys have told me buyer never made escrow and I haven't been able to contact them again. So they had no money in the game anyway because they didn't make their escrow, but they owe it actually, and they're in default, and they actually owe the seller that money technically, but we're not going to get into that today. So yes, Malvis, that is you cannot be held hostage because the buyer won't sign the release and cancellation. If they miss their dates in the contract, they are in breach, and you can go put it back on the market. Dates for certain dates, closing date, yes. Otherwise, you have to get them to agree that they breached. Okay. Any other questions? And that goes for the loan approval period too. On day 31, 32, 33, it's the same thing. You go back on the market. I don't care if they won't sign their release and cancellation or not. You can send them the release and cancellation because the money's going to be coming back to them because they didn't let you know. Still goes back to them, but they have to agree. They don't have to sign the thing. I can put it back on the market because it's the seller's option to cancel on day 31, 32, 33 if you did not hear from the buyer about their loan approval. It's a serious business, guys. We're all grown ups.
So they don't sign the release and cancellation, but and you go back in the market, but are you going to be able to close if you find another buyer?
Yeah, they're not in contract.
But if the money is in escrow,
Doesn't matter.
just for
Of
the
course.
escrow.
Of
Okay.
course. Yeah, that's a dispute between that deal is dead, and that's a dispute
Right.
between the buyer and the seller.
Okay.
And that can go on for years. I mean,
But it's not attached to the property. They could
not
just.
attached to the property. No.
Okay.
If you're in default as the buyer, you have no claim to that property.
Right.
The seller is fine to say, seller can't have two active contracts on the same property at the same time. But
Okay.
once that contract is dead for whatever reason, even if I can't just put your property in a contract and never sign a release and cancellation, and you just can't ever sell your property. I have an option forever. No, it's once I don't perform whatever we agreed to, then you're free to sell it to somebody else.
Okay. Okay. Thank you.
Any other? I thought I saw a hand go up. Any other questions? Yes, Shirley.
What if the seller wants that deposit?
What if the
And-
seller what?
What if the seller Chad's case, and the seller is off the market for 2 months, and everything past the financial contingency, past the due date, and then the buyer default, but the seller wants this deposit, escrow, and but can they still but buyer doesn't want to sign any release, so can they still go back to the market and still claim the deposit for the seller?
Yeah, that's exactly what he has going on, and that's what I told him to do is put it back on the market. So he's got a buyer who's in default and wants their deposit back, and he's got a seller who wants their deposit. But yes, he can go back on the market just because the buyers won't sign off. The buyers are at fault and they won't sign off on the. I apologize, guys. I got construction going next door, and they won't sign off on the. They won't sign off on the release and cancellation because they don't want to sign the escrow to the seller.
Right.
Then they'll sign one that says they get the escrow, but the seller's not going to sign that. So both parties have to sign the release and cancellation for the title company to disperse. Right? You've had that before. You all have had that before where people don't agree on that.
Right.
But I can go back on the market as the seller because we agree that the deal's dead. As soon as I got the loan denial, I agreed the deal's dead. Everybody agrees the deal's dead. They're
Right.
past their date and they don't have approval. And they've let me know that they can't close. And now if we go past the closing date, it doesn't matter what they let me know or didn't know. Doesn't matter if they say, oh, we've got the best financing in the world. We're all lined up. Well, you're supposed to close today and you didn't.
But
So
they have to go through the lawsuit to get that deposit, right? The title company won't release because there's nobody want to sign that release form.
Right. The title company can't say who's right or who's wrong, even if they know.
Mm-hmm.
They can't disperse the money without everybody agreeing.
Gotcha. Thank you.
They can know that this was 100% the buyer's default on the contract, but they can't give the seller the money. The court has to decide that.
Gotcha. Okay. Thank you.
Yep. All right, guys. Any other questions? Juan Pardo.
Ryan, I don't know if you mentioned it, but if you put in a contract beforehand, if a buyer cancels with an inspection period, no need to sign by the seller, give me the EMD back with the title company, use that enough of a proof and just give it back if you decide to cancel within the inspection period, or do they still ask for that signature at
Nope.
cancellation?
They're still going to look for the signature.
Even
Even though the buyer's 100% in their right, and it can be frustrating because some sellers still get mad. So they didn't read that.
Even if it's writing at the beginning of the contract that says seller agrees to return EMD without needing to sign cancellation.
No, they won't do that. I mean, I've never seen that, and I doubt a title company cannot make any determination based on the language of the contract, because if you're going to do it based on the language of the contract, the inspection period, I can get out for any reason. The buyer, in this buyer's sole discretion, you can cancel on day 5. You made your deposit on day 3. You cancel on day 5 of a 7-day inspection or a 15-day inspection, and of course you get your money back. Right? That's very clear in the contract. But the title company cannot make any determination, even if it's very obvious and clear. Seller still has to sign off. Now, can the seller unreasonably, if they're mad, you didn't even get an inspection. It's your inspection period. You're not on an as is. You are not forced to get an inspection. So, on a standard contract, you are supposed to, or you're in breach, and so you won't get your money back. But on an as is, you are not forced to get an inspection. You don't have to do anything during that inspection period other than agree that you're going forward with the deal. Okay. You can back out for any reason whatsoever. You don't, you woke up with a tummy ache, you can back out. Doesn't matter. All right. But the language of the contract makes no difference. So I've never seen that before, what you're saying, but the language of it makes no difference. And I don't know why a seller would agree to that. I mean, like, how badly do you want to back out of this thing? So I don't know. But I've never seen that before, but it doesn't matter what the language of the contract says. The title company cannot make a determination without everyone agreeing in writing. Signing. All right. Because we've had some very obvious ones like that. Says inspection day, says I have 10 days to cancel for any reason whatsoever, and I'm canceling, I'm letting everybody know. They still can't make that determination unless the seller signs off, which they will. Now, in that case, the seller cannot go back on the market holding the buyer's deposit. Okay. In that case, they cannot. Any other questions? All right, guys. Have a great day. We'll have something great for you next week. I hope this helped you guys. You didn't have a lot of questions. Seems like you knew everything. Oh, your 1099s. So your 1099s are being mailed out, some today, some tomorrow. They'll all be gone by the 31st. You'll be getting them. You've all been sent an email with them. You all had your time to argue with them, but you're probably going to wait until April to try to do it anyway. So there may be a charge for updating your 1099. You had your chance. And you either agreed to it or you didn't. And we have a deadline we have to meet. So we send it out to you first for you to argue with it. If you didn't argue with it, then you forever hold your peace, or you do it. Most of you are going to wait till April or October, then argue with it. And you're going to get charged because we get charged for changing them. And it may or may not raise red flags with the IRS. That's between you and them. But you'll be fine. As long as it's right, you'll be fine. So I want to tell you guys this again, for those of you who might have questions about it. If you close a deal in late December, we are on a cash basis accounting system. So if we don't get our fee and completely process everything, it is on January of the next year. Okay. So we had to have several of you close deals in late December, and you asked us, why wasn't 123 Johnson Street on my list? And the answer is because you might have closed on the 27th, but we didn't get the money till the 2nd, and we processed you on the 3rd, and that's when your deal got done in our books. And that's good because your tax liability goes off another year. If you want to claim it in that year, you can. So 1099s also, guys, are not they do go to the government, but they are not an end all be all. You can file your taxes without physically having a 1099. It's not like a W-2. You can file your taxes without physically having a 1099. You just report what you make. Okay. So if you want to add something to that, you can. If you added that 123 Johnson Street, the $10,000 you made for 2024, which would be silly because you're just going to pay taxes on it sooner, then make sure that you take it off your 2025. When you get that, you're gonna be like, why is there an extra $10,000 on here? Well, because you already paid taxes on it the year before. Make sure you take it off of that. Okay. I recommend you just file with it going to 2025. That's when we saw it. That's when you might have gotten your money in late 2024. You got your money on New Year's Eve, but we didn't get it until January. Okay. So that's when it goes on our tax records. Fair enough? Just so you guys understand that for next year. All right. Thank you, guys. We'll see you next week. We'll have something great for you. Bye, everybody.